All right, a very good morning, everyone. Welcome back to the market snapshot. It's a brand new day, brand new market opportunities. I hope you guys had a lovely weekend. I hope you guys stayed safe. For the guys in Uganda, of course, we are in a new Uganda, new president, new Uganda, new everything. And I hope you guys did keep safe, stay indoors, and prepare for what the market has to offer. So as you all know, it's a brand new week, and first and foremost, I'm going to start by passing by a risk disclaimer. So none of the views are offered here are financial advice, but as well they're for educational purposes, and you can as well use them to probably supplement on your trading ideas, and kindly do your due diligence before you take up any market opportunities. Once again, my name is Emmanuel Boto. For the guys that are new here, the education partner in FXPesa Academy Uganda. And don't forget, we do offer free classes, beginner, intermediate, and advanced here at our academy, 3 p.m. to 5 p.m., Monday to Friday. So as long as you're around Kampala, you know a person or two around Kampala, feel free to let them know. This is something very helpful, and we're here to help them kickstart their trading journey. As well, we do the same in Tanzania, FNB House, third floor, Monday to Friday as well, at 1 p.m. And Prudence will be there to definitely take you through. As well, we do have a variety of online classes that we do offer for beginners and intermediates. So if you're unable to make it to any of our locations, or you're anywhere else in the world or in Kenya as well, you can be able to access the classes, and you'll find a link in bio, in the description, and on all our different social media platforms. On top of that, we'd like to remind you that it's a brand new year, brand new opportunities, and don't forget to go big by taking advantage of the Caribou bonus. That is a 100% deposit bonus on your first deposit as fast as you create your FXPesa account. So go ahead and create your account today so that you don't miss out on those goodies that can kickstart your first quarter of the year. Now, we are back once again, and this month we have a very special monthly webinar. Now, for the guys that have been coming for these webinars, you know how we try to make them impactful, and this year we are making it bigger and better. And nothing beats a webinar that kickstarts your market by showing you where smart traders are actually looking to organize themselves. Nothing beats organization or preparedness. So knowing where to spot for the right opportunities early in the year, early in the quarter is the best thing. So you don't want to miss out this month's special webinar. It will be happening next week or the last Tuesday of this month, and the registration link is ready for you guys. And this time it's a limited spot, so go ahead and sign up today. The link is in the description as well. So we're going to be breaking down where smart traders are looking at. Now, the whole of last year we kept speaking about some of these keynote things, from why you should be looking for bulls on gold throughout the year, why you should be buying GPJPY throughout the year. And of course, those that took what we told them deeply, you definitely are reaped big out of it. I can tell you guys, gold was rallying for over almost 10 months, and we had probably the biggest year-to-date increment on pairs like silver that we analyzed early last year. So this time you don't want to be behind in these kinds of events. The market trends are starting to prepare themselves. The signs are starting to show. So go ahead and sign up for that webinar today before the spots get limited or run out, because we are going to take only a limited people on that. So other than that, we can kickstart with this week. It's a brand new week, began with a lot of heat and tension, not in Uganda, not the political things in Uganda, but basically because Trump is back again. Brand new year, brand new tariffs, and he threatened a tariff on eight European countries as we woke up today morning. So we are going to be diving deep down into that and seeing how it's affecting the market. And of course, in that special webinar, we're going to speak about how you prepare yourself and how you look for the opportunities in such times, right? Because it's something we have spoken about the whole of last year. We have had amazing analysis on it, amazing trades on it. So you want to be ready for that webinar. You don't want to miss out on it. Tell a friend to tell a friend as early as possible. Once again, good morning. Good morning, Dairy Musk. Okay. Maureen Kakunji, good morning to you. Welcome back. Thank you very much. NZD USD and GBP USD, I'll get right to that. Sami Njati, good morning to you as well. Tamale Trust Analytics, I have no idea why, because I do not trade with that. We trade with only FXPesa, the best broker in East African equity, of course. all around the world. Euro USD, I'll be happy. I got you. I'm going to get down to that. So first and foremost, let's look down at our calendar. So there's a variety of calendars anyone can use in simple terms, but we always prefer simplified calendars. For example, now with our calendar over here, it's going to just show you what news events you're going to look out for today. So we have a lot of news coming out from China, and many of you guys, as I know, don't trade China. But what you can see towards the end of this is Canada. We have consumer price index year to year, and then of course our consumer price index core year to year coming out later today. That's for the Canadian dollar. So around 4:30 and 5:20 East African time, you want to be looking out for pairs on a Canadian dollar. Of course, USD card does have an asset, a trade idea from our signal center over here. So of course we can just look at that. Shall go down and break it down, because of course that means there will be some volatility. And as much as some people fear volatility brings opportunities as well, right? So we are seeing we have a buy limit entry, but shall go down and reanalyze this as well, because this usually are AI signals as well. Shall go back and break that down. Now, earlier on, I mentioned one of the big major market movers today. Of course, if you woke up at around, let's say, for guys who are awake like me, because we were trying to catch some buys on gold into the Asian session, at around 3 a.m., gold had already hit about 1.5%. In terms of the market open value today, and of course because of that scare that we had from Trump threatening to put tariffs on eight European nations, of course, and of course comes in with a saga on why he wants to get Greenland on his side as well. So you have a headline that says European equity markets were set to open sharply lower on Monday after US President Donald Trump threatened new tariffs on 8 European nations in a bid to force purchase of Greenland. NATO members opposing the plan. Okay, let's do this. Opposing the plan, namely Denmark, Norway, Sweden, Finland, Germany, the UK, France, and Netherlands face a potential 10% tariff from Feb 1st, rising to 25% in June unless an agreement is reached. European leaders discussed possible retaliatory measures, including reviving last year's plan to impose tariffs on US goods. And we all know that the EU failed miserably. The nations were there in Europe are, of course, trying to say that they are going to be strong against Trump. But when the EU president came to the US, she actually apologized on their behalf and went ahead to come to agreements with Trump. So while French President Emmanuel Macron reportedly urged activation of the EU's anti-coercion instrument in pre-market trade, Euro Stocks 50 and Stocks 600 features fell 1.3% and 1% respectively. So the stocks are plummeted, but surprisingly, you're going to find that Euro USD actually went up. Now, this is a trend that we saw last year when Trump was going, of course, with his Liberation Day tariffs. We saw the euro actually gaining strongly while Trump was going back and forth with his tariffs on different nations. And of course, history repeats itself, and you want to be in the best possible place, right? So, of course, the best thing will be to analyze how does these tariffs affect the EU? Then you know how long or how strong the EU buy will be. Will it be as big as one of last year, or will it be a little bit less significant, right? So everywhere you're going to find the same news. Stock features fall as Trump's Europe tariff weighs on sentiment. Europe braces for transatlantic relationship toughest week. Of course, back to Trump's tariffs. He really wants to purchase Greenland. So I guess the world is changing. Nowadays, you can buy countries. Yeah, Trump in Davos, Netflix, and Intel results. Of course, in Davos, they have a celebration this week, and Trump will be delivering a speech on Wednesday, where, of course, people expect him to hint on the tariffs he's imposing on the European nations, the 8 European nations, and, of course, presumably, the situation with Greenland and why he desperately wants to purchase it as well. These are some of the market movers we are going to have. So we won't have any major market movers today. We shall start looking at these, of course, starting after Trump's speech on Wednesday, because right now all the markets are focusing on what the tariffs will look like for the European nations. So I want to see what Finviz has for us. Let me just get it to load here in a bit. Once again, don't forget, I'll be watching the comment section. So in case you have a currency pair you'd like us to watch out for, you have a trading related question as well, feel free to drop in the comment section, and of course we shall get into it. Okay, so let's look at this. We can just look at the screen and look at what stock markets are moving up today. So usually when you're having tariffs, one of the things that get hit hard the most are always going to be things like stocks, right? Of course, you're seeing things like the Euro stocks are already plummeting early in the market open today. And of course, even the US stocks, we are seeing Google is down, Apple is down, Nvidia is down. Of course, consumer Amazon is still up. Of course, Tesla is down. We're seeing a lot of tech companies are being hit a lot already early in the day. The Microsoft and Oracle are, of course, up, and Palantir negative 3.45% down. That's something that you need to be careful with. Palantir has been one of the best performing stocks coming from last year. Palantir. So for guys who are looking into investing in some heavy stocks, Palantir is still a potential stock. Of course, Oracle would have been a good one coming in with a deal they signed late last year. But of course, you know that the price is a bit too premium already, but that doesn't stop it from going up. It could still continue going up. But going into things like tariffs, one of the reasons why you may expect Trump to put in tariffs and yet likes having a thriving stock market, in my perspective, would be that he needs to shake up the markets a little bit for some stocks or major earner stocks to, be shaken a little bit for to get good prices to buy into them. Yeah, so the USD analysis, shall get down to it. Imle Manuel. And then thermal interest analytics. Can I trade NASDAQ on FXPesa? Yes, you can. We are going to analyze it in a bit. So right about now, I think I can now move on and can look at our technical analysis. So I'm going to move on to our charts. Then we can see what today and what the week is looking like. Of course, we shall look at the general perspective of the week, then look at where today's opportunities actually are and how we can be able to navigate them, right? So let me just put this chart aside. Let's put this chart aside. And then let's break down to our MT5 charts. So one of the questions I've been facing a lot is because people have been around most, I'm predominantly a swing trader, right? And people tend to ask me how I tend to use the macros. Because usually with the macros, how I use them is just to know that I'm going to hold this trade for a longer period of time. Because when it comes to swing trading, it actually gives me a lot of leverage. And sometimes these macroeconomics, right? Just knowing basic analysis of macroeconomics, right? Like tariffs, what do they mean for the dollar in the long term, right? How will they balance out when the CPI comes out like this? What does this NFP figure mean for the next 2 weeks for, let's say, the dollar or gold or euro currencies, right? Just being able to analyze these things. They are basic things, actually. Sometimes you just think they're so complicated, but they are basic, how would I call them? They are basic techniques on how you can just simply break down macro analysis and you have a long-term perspective, and you still use that long-term perspective to look for these daily opportunities at the end of the day. So in this month's webinar, I'm going to be having a full presentation on how you can do exactly that. Prepare yourself for those long-term moves and see how you can get daily opportunities from them. For example, gold bought for over 10 months, right? But the question is, how do you wake up every single day and look for buying opportunities? When they appear, right? Because you don't have them every single day. But imagine how many opportunities gold created if you decided to buy, right? Because we spoke about this from the beginning of last year. Right from after Trump's coronation and began saying his executive orders, began speaking about the bull trend on gold, right? The question is, how do you wake up every week, every day, and position your mind to look for those daily opportunities? Because you have a macro perspective of gold being bullish in the long-term effect. So these are some of the games we are going to be sharing in this first webinar of the year, so you don't need to miss out on it. Once again, the link is in the description, and we're going to be speaking at how smart traders are positioning themselves for 2026, where the opportunities are, right? Because we can see the trends that are going to drive the market through the year. So other than that, let's get down to our technical analysis, where we tend to look for our daily bread, our daily opportunities, our weekly opportunities as well. So of course, I like starting with the dollar index because I believe many of us here largely trade the dollar index or dollar-related currency pairs. For starters, we have a dollar index on a daily time frame. So last week we were still bullish, and we said we'd expect a breakout of this area that we saw. We had a pullback, didn't quite get into this zone, and price about to give us another breakout structure right above this, right around this area here. So that means price gave us a new structure or a new higher high and a higher low over here. So of course, why I love these high time frames, because identifying structures becomes so easy. So price comes from a low, creates a higher high, a higher low, right? Then a higher high, showing you that price has been a bullish. Remember, this is a daily time frame. Of course, the morning we woke up to a weaker dollar, because of the Trump tariffs. We all know that tariffs have been affecting the dollar negatively, coming from what we saw last year, right? Last year, due to Trump's tariffs, we did see the dollar index hit a 3-year low, right? The last time it had hit that low was in 2022, and last year we saw it revisit those lows due to the Trump tariffs. So these are macros. Their effect is almost more than definite. You expect them to react similar ways until the market reacts to them based on what they are seeing them leading towards, right? So you can see price gave us a breakout. We're having a pushback, and we had a daily demand level here that could offer us some nice intraday bullish opportunities, and you can see it starting to reject, right? This on a daily time frame. So if you get nice viable lower time frame confirmations, we can see the dollar start recovering back that move, basically based on how the market's absorbing or taking in the news of Trump's tariffs, right? Remember, they are assessing the impact. Between now and Wednesday, I would expect this pair to try to give us a pushback to the supply level here, where we can look for either some bullish, some bearish, or in case area here or the supply level fails to offer us nice bearish confirmations, we shall of course, remain bullish. So let me just mark this level like this. It's going to be a supply level we're going to watch out for, where you can expect some nice bearish opportunities, of course, because the tariff is supposed to be due 1st of February. So until 1st February, we're looking to see uncertainty within the dollar, right? Either uncertainty within the dollar or a weak dollar. It's going to be one of the two things, either a weak dollar or uncertainty within the dollar. So you can see a push into this area where you can look for bearish opportunities to take us lower. But in case price fails to give us bearish confirmations within this area here, we shall definitely look for a break to the upside, right? We shall look for a break to the upside, and then you can see if the dollar can continue its recovery move into this year. This year is expected to be very great for the American economy because of very many factors. And I'm going to just mention one, which will be the World Cup. That means there's high potential for business. The rest, I'll preserve them for the webinar, so not to miss out on what other opportunities may be driving the markets this year, especially for the dollar. Make sure you don't miss out on that webinar there. So the other thing we can see is price currently is creating some kind of consolidation on the 1 hour time frame that we are seeing here that could push us lower in case price breaks below. Of course, looking into intraday opportunities, we can see a push below that. We can come down to a 15-minute time frame and try to see what the market's trying to offer. Remember, the market is largely still bullish, but right now we are seeing this bearish momentum coming in due to the Trump tariffs. Now, what I saw on the 15-minute time frames, that price has given me a break above this area, which is the first sign that price may want to continue pushing towards the supply level up here in the 1 hour time frame that we have just marked out. So I can reduce this up breakout level and put it around here. So you can see price push into this zone, then give us some confirmations to the upside. Basically, let's look for like a 3-minute or a 5-minute confirmation coming from structure to pin bar confirmations that you can look for within this area to push us to the supply level. That will be our next decision level, right? That means price should come into this supply level here and then give us some bearish opportunities. Or if you don't get them, that means you'll have some bullish momentum, then price will go right above that. And violet, of course, will be going above to create new higher highs, because this is around the level where price had created the previous higher high. In case price does that, then of course we'll continue its bullish trend until definitely February, where you can see that definite direction based on what Trump's decision will be, because you know that from 1st Feb, whatever decision he makes will probably last until June, as he mentioned, because that's June is why he says he will now push that 10% tariff to 25%. So in case you go to June and he has potential, just like we saw him do last year, he may put a pause on the tariffs probably until June or for 3 months, as usually does, and then we can see how it will kick off from there. So it's a dollar index basically, and this is structure perspective we are seeing coming in from the dollar index. So I want to relate this down to pairs like Euro USD, as it had been requested by Sammy. So let's drop down to Euro USD and see what Euro USD has for us. So last year we did see a trend with Euro USD whenever Trump was putting in tariffs, right? And this trend was basically, we saw the euro pushing to the upside or gaining strongly against the dollar. Now, some people in that case scenario tended to think, how would I call it? Tended to think that euro was kind of like some safe haven, right? But the euro is not, for this particular case, it's not the best safe haven to look for. Yes, on some tariffs and some conditions based on what markets particularly is going to tariff, because it won't just tariff like come tariff, it says I'm tariffing, let's say Germany, right? he won't tariff every good from Germany. He's going to target major industries that he feels will affect Germany. Usually it's what he does, right? He may tell them, okay, from Germany, what do we get? Manufacturing, right? We get vehicles from them. So I'm going to do what? Tariff vehicles. Then you assess the impact of that tariff on the economy and stuff like that. Then you will know where the safe haven is going to be. But in these case scenarios, the easiest safe haven will be CHF pairs. So we shall analyze like 2 CHF pairs later on. So Euro USD tends to give us this push to the upside, but realize that it's still predominantly on the daily time frame giving us some bit of bearish correction move, because of course last year we saw a very strong bullish Euro USD. So as you can see, price gave us a push to the upside and a push to the downside, and of which currently we are seeing today's market gave us a push to the upside coming in from this area of interest that I'm going to mark with a rectangle tool. You can see we have what we call a long wick rejection. This rejection over here is called a long wick rejection, basically because it sweeps out the candle on the low on the previous candle wick, sweep out this low. Then you find that it closes like almost a pin bar, a very small body, and a very long rejection wick to the downside, right? So this is what I like calling my rejection wick, because in a bullish move to the upside, price gave us a breakout from here. Then this was more of a correction move because price is creating a lower low, lower high. So right above this, price gave us this push into a supply level. Because a daily time frame, it's a strong time frame, we're going to realize that the most recent price action is actually bearish, right? So not until price starts creating highs and higher lows, we are going to try to look for our daily opportunities based on that bearish momentum, right? Until we see a shift on the daily time frame to the upside. Right now, what we have is bullish momentum, but the structure hasn't shifted to the upside. The only time the structure will shift bullish as per structure is after price breaks out of this high or that supply level. Then we can now start anticipating that bulls are coming in, and we can look for a long-term bullish move on Euro USD. So if this is a daily supply level, right, we're coming from a daily rejection week to a daily supply level, we can expect to see some bearish reactions from these high time frame supply levels, right? So as you can see, I already had a black line here because 1.6320 was already an area I wanted to take a trade from. On USD, I had a sell limit around that level there. So we had a sell limit around this level here. So you can see when we refine lower, we have a 4-hour supply level here. We had this big push to the downside. We had some bit of consolidation. Then price came down again before we had this impulsive move to the upside. Before we had that impulsive move to the upside, so we had this 4-hour supply level over here, as you can see. This was the 4-hour supply level that price came into. So I had an entry level around this 1.16320. I had that black line there already, where I was looking to look for some selling opportunities, and price came right through it and rejected, as you can see. A very nice and beautiful rejection. So how shall we look for continuation trades? If price is now start pushing to the downside, we have a very nice imbalance over here, as you can see, and price usually is moving to 2 levels, right? To fill up imbalances or to take out what we call external liquidity, to take out highs and lows, right? Previous highs and lows. So right now, if price has swept this high and low, the initial target we are going to have before we decide that long-term direction, because we are looking for short-term moves, right? Intraday opportunities, that I'm going to look for opportunities coming down to fill in this imbalance before I even target this low here, right? The rest will be based on how price confirms this push to the downside and what momentum price is to go down. So when I look at price coming below, if I want to look for that continuation trade, the first thing I'm going to look for is what obstacle is there, what potential area is there before price, where price can buy from without going to my area. What area is stopping me from getting to my imbalance, or to fill up that imbalance level there. So that's the first thing I'm going to look for. I'm trying to get rid of this other box here. That other box tool. Let me just go to this time frame slightly. Okay, we're now on our time frame. So I was saying I'm going to first look for the nearest obstacle that price has to get out of the way if it's to come and achieve the objective of being bearish through today, right? Of course, the day has been bullish, and we are seeing that it had a very big bullish move into a higher time frame area. This area is also a 4-hour zone, by the way. So when you go to the 4-hour, you're able to see there are 4-hour supply level, as you can see, a very clean supply level actually on the 4-hour time frame. We have a much clearer structure. So let's go with the 4-hour time frame. So if I use a 4-hour time frame, I'll break down to the 30-minute time frame, right? So I want to look for what levels price can use as obstacles without going lower. So this area is on the left-hand side have already been taken out, leaving me with this high over here, and then this support level, right? So what I'll be looking out for in today's markets, going towards the New York session, of course, being a dollar rated pair, my best opportunities will come either at the London Open or towards the London Open or towards the New York session open, right? So I'll want to look for a break below this area and a push to the downside. Of course, after price breaks below this support level to return to resistance, then I'll look for that push to the downside to fill up this imbalance here, right? To fill up this imbalance, so I can look for some intraday opportunities later on within that push. That push I'll look for will be for price to come and break above this high, and then this move I'll look for, because of the distance price will have to cover probably dip into the New York session, usually towards the London close, because these are the windows in which you want to look for the best opportunities towards and during the London Open, towards and during the New York Open, and towards the London close. So these are my perspectives on my trade ideas on Euro USD and what exactly I'll be looking out for. So my London session London trader to be from 1.16320. Price came through it, rejected it nicely, it's pushing to the downside, and I answer that area pushed me right below this support level here. The momentum looks good so far. So yeah, if price doesn't reject and close above this support level here, and then we can see a push back, then a push to the downside. So that's for Sami Njathi. That's my perspective on Euro USD. What I'm going to be watching out for in today's markets, right? As far as technical analysis is concerned, as the market weighs in, of course, the impact of the Trump threat on the tariffs. That's Euro USD. So somebody went ahead and asked for NZD USD and GBP USD. So we're going to go right to them and see. Because that with NZD USD over here. So let me just change up this template. NZD USD, let's just change up this template to this. And of course, let's start from the daily. Sometimes you can actually look at the weekly time frame. I know some people get scared of these time frames, but it's very important usually just to look at these time frames just to see what price is trying to give you. Now, in a weekly time frame, if I look at the general structure, price has come into the downside within this price action here. As you can see, we had this price channel to the downside, that price was forming. Then somewhere in between here, we had this lower high that price came and took out, right? After taking it out, price, of course, started forming some kind of rejection to the downside. When you look at this break above, price didn't close above, meaning that this is still the same high. So price formed a low and then a high. You could call it a higher high, but I wouldn't call it that yet, quite yet, because this is the origin. Then that's the high price has created. And then you see price pushed us back a little bit. I think last week I spoke about something called a double wick formation. And I think someone on Telegram asked me about a double wick formation. And I didn't get enough time because, as you may know, Uganda, we have had an internet shutdown due to the political activities going on. So we're in the dark. But this is something I call a double wick formation. It's basically two impulsive bullish candles that price formed right before it creates a break of structure, right? Or before it creates a break of structure, or two areas, those two wick. Some people call it a wick overlap. So this is basically what I meant by that. And usually when I go to a lower time frame and find there a structure, it becomes an area of interest. So this is my break of structure that price gave me. And this is the double wick formation price formed right below. So I call that a double wick formation personally. And it's an area of interest. I spoke about a similar scenario last week. I don't know if I remember, I can't remember the pair it was on, but I think I'll get the analysis in case we go through those pairs again. But that's what it looks like. So usually when I go down to like a correlating time from like the 4 hour, I want to anticipate finding their structure. And if I find a structure there, then it becomes an area of interest. So when you look at NZD USD, we had a structure right in between this, right? We had a structure we could refine because this other structure above, price had already come to utilize it before breaking out. So we had this as our last valid structure inside the double wick formation. So price came and started pushing to the upside. So when I come to the 4 hour time frame, what are we looking at? Price is giving us some potential of some bullish moves on NZD USD. So I want to look at them from the origin. Price comes from an area of interest on a weekly time frame, gives me a nice breakout. Then it gives me this correction move into a 4 hour demand level, right? Into a 4 hour demand level. So I want to look for 4 hour zones from which I'll look for trading opportunities. So currently, price has offered us another break of structure on a 4 hour time frame. I'm going to just mark it out with lines. We have this breakout that price has created over here. That's a nice break of structure. And I expect price to come and take out these highs over here, right? These are the highs that you expect price to come and take out. Then consequently, eventually take out all these highs. The next supply level price can target is going to be right around this area here. These are the only fresh supply levels I'm seeing above. So it's probably our target area or our next decision level area where we can expect price to come to. And either we look for sales or price breaks above it and we look for buying opportunities on NZD USD. So in this same perspective, I'm now going to drop down to a 30-minute time frame and start looking for two things. Because either price will have to break out of here, then continue to the upside, or it's going to give us a retracement into this level here, or into this breakout zone before it continues to the upside. These are the two potential areas I have that price can come back to give me that bullish opportunity. These are the decision levels, or the areas from which I want to definitely take my best buying opportunities, or the areas price can move to before it goes bullish, right? Break out of that, then continue bullish, or come below and continue to the upside. So I'm going to look for what areas price could, or what price should achieve within today's price action to look for those short-term moves, right? So when I come on my 30-minute time frame, I realized that there was a demand level right around this breakout here. So that's the demand level, and price has already come into it and it's pushing to the upside. So what do I expect within this? Price going to break out of this intermediate highs, then continue giving me a push to the upside. So basically, I'll be looking at price breaking out of this, probably get like a break and retest or a break and a correction move of this area here. Then now we can start getting those opportunities within today's market to push us to the upside, right? On a 30-minute time frame. I've already seen my high time frame perspectives, so I'm looking at this on my 30-minute time frame to be achieved within today's market. Of course, you can see this through today's New York London session. We're only 35 minutes in, or we can get better opportunities towards the New York Open, towards the New York session open. That will be the best opportunity to look for, because there will be some kind of momentum coming into the market. So this will be a nice opportunity to look out for in NZD USD. The momentum coming into the upside is nice. Something you'd want to see break above this high, give you that correction move, then push to the upside. So in case price fails to actually close above this, because we have areas where we shall see price come sweep above the high, doesn't close above it, that doesn't count. Price can now push us lower into this area, just like we are seeing the areas on Euro USD. We also have this imbalance down here, right? We also have this imbalance down here. So it's an area you can see price push us towards that as well. So looking at just the lower time frame perspective, similar to what we have on Euro USD. If you look at these two pairs, you're going to realize the similar structures, right? We're having this resistance, would like price to break above in case we are to go upside. And then we are going to have this support level in price to break below to give us those bearish opportunities. So here we can see that price had this structure over there. So we are going to take this low here as our support. It's a 30-minute low to be a support level. Then we shall see price push into this imbalance, probably target and use it to buy above, or definitely use it to go below in case it doesn't give us a bearish confirmation. All right, so that's our NZD USD. Very similar structure to what you're seeing on Euro USD. The only difference that Euro USD was still trying to target this level here, and you can see it hasn't actually gotten the level. And you can compare and contrast those two structures, NZD USD and then Euro USD. They are very similar right now, as you can see, or as we're looking at these markets at the moment. So I can go down to GBP USD. Yes, someone asked for gold. Shall get to gold also after this, after GBP USD. Of course, gold, because it's one of my favorite pairs. It's my major pair that I trade day in, day out. So let's get down to GBP USD and look at this. So you could still look at the weekly time frame as well. And you can see, just like on the weekly time frame on NZD USD, we had that breakout to the upside after some bit of bearish momentum. And let's look at the daily time frame from here. What's happening? Price had this push to the upside. So you can realize that here we're having a whole price channel to the upside, right? A whole price channel to the upside. Then price is able to offer us a shift to the structure to the downside with this initial break below. And then price is able to give us another breakout to the downside. So we are seeing some bit of bullish momentum, of course, because of today's headlines with the Trump tariffs and all that. So initially what we expect to see Is that push momentum to push us at least all the way to this daily level here. So realize that even Euro USD, there's a daily level above. The price is currently respecting the 4-hour level, right? And I'm trying to see if it can give us some confirmations for that bearish move. It's currently respecting this 4-hour level, but you're going to be careful that there's this daily level above here, right? And that's seen clearly also on GBP USD. So there's good potential for price to go above there. Though still we cannot rule out the fact that price can give us some bears based on the 4-hour structures, and we are going to similar structures, right? So you can see even here we have okay, this is inside the daily level, which is the best possible selling area we're going to have. It's going to be this. Remember, it's also inside the daily level. Then on the 4-hour, once again, we are seeing this same similar structure. We're seeing this same similar supply level, right? Giving us a rejection, just like it's happening on Euro USD. This is the beauty of getting this. This is the beauty of using higher time frame areas of interest. These 4 areas, they'll give you some reactions. And usually, Paul Dualt of intraday of scalping, these are the areas you want to be trading. You want to be trading the 4-hour supply, the 4-hour demand, the daily demand, the daily supply level, because they are going to give you good reactions. You know, if you're trading pairs like gold, Bitcoin for scalpers, you're having something of like 50 to 100 pips within just a reaction within this high time frame areas. So you can see this 4-hour area giving us some bit of reactions. So you go down the 30-minute time frame, expect to find similar structures to what we are seeing on NZD USD, and then of course respectively Euro USD. So again, we're going to have the same high. I'm going to just mark it out from here. Then you can just compare and contrast. We have this resistance up over there. Then we have the support level right below this. You can see this, right? Similar structures, and it's not going to change the perspective. A break above the resistance, of course, candlestick closure above on a 30-minute time frame. Retracement, push to the upside into this level here. Break below this level here. We expect price to give us some push down to try and fill up this imbalance created over here. So the structure is exactly the same. NZD USD, GBP USD, Euro USD. Compare and contrast. You can rewatch this video. We have spent more time on those pairs that actually are very correlated. So I'm going to leave those exactly at that. Someone, I think in Emmanuel, asked for ZAL USD gold, which I'm going to hop into. In the meantime, I can go through some comments here. Sami Njathi, there is an analysis I did on Friday. Can I share with you via email? Yes, please feel free. You can definitely share it. I think I'll see if there's a possibility of me sharing my email there. You can share it as well. But then that's something we shall have to go through next. Basically, for education purposes, we can go through it next Monday on the market snapshot. So yeah, I think I'll see how to share my email. Possibly, we shall see if there's a possibility of doing that. The double info explanation was not blocked. Was not. Oh, you mean the double wick formation, right? The double wick formation. So let me try to explain it here again. So usually when price gives us what we call high momentum breakouts, right? I think I explained to Euro USD on NZD USD. When price gives us what we call a high momentum breakout, right? When you look at the weekly time frame, a high momentum breakout, say it was blocked by the video grid. Let me just do this from here. I believe the grid is now out of the way. So it's not double, it's called a double wick, the wicks on a candlestick, right? A double wick formation or a wick overlap, a double wick formation. So in this case now, you're going to see that we had this breakout. We have this breakout here, right? This is our breakout. Of course, my breakouts will always be the candlestick closure. Candlestick closure above that wick. We have this candle closing above this wick on the left-hand side. Then on this leg that pushes to the upside, this leg that pushes to the upside, this one here, on this leg, I'm going to notice these two big bullish candles, right? Then they have this wick to the upside and this wick to the downside. Now those wicks out I call that double wick formations. These ones here, right? That's what I call that double wick formations. Now if I come and find this breakout and this double wick formations on this particular time frame here, this is a weekly time frame, I'll go to its correlating time frame, which is a 4-hour time frame, and I'm going to look for demand levels within that. If I don't find any, then I'll not use that double wick formation. But if I come to a 4-hour time frame like this, and I find, right, and I find that the week formation, this was the week formation, the weekly time frame, and the 4 hour time frame, what am I going to see? I'm going to see a nice demand zone right around this, right? Nice demand zone right around this. That's where I'm going to look for my trading opportunity and price to come in there. Then I will look for my confirmation trade, right? I explained this a lot in the physical classes in Uganda, and I'm going to talk about it in the 11 a.m. class. So in case you're interested in the 11 a.m. class as well, you can always sign up for it with the links in our link in bio. There's an 11 a.m. advanced mentorship class. So that's what we'll talk about in that week formation. Let's go down to gold. Let's go down to gold, which is of course one of, I think it's the majority's favorite pair, right? So of course we still have analysis from last week on Monday for the guys that tuned in. This is our analysis, played out beautifully and nicely. So that breakout, push down, push to the upside. Then of course the tariffs have just given us, propelled us, right? And as I mentioned last Monday, this push to the upside was largely sponsored by the NFP figures that came out. And I mentioned that expect that break above, closure above, price to push down, and we're still targeting the 5,000 level. I'm still confident in 5,000 in the first quarter. I'm very confident in this, and I expect, of course, if Trump starts with this tariff wars time and time again, he's just helping me fulfill my expectations on gold. And as I mentioned earlier on, last year we spoke largely about gold being bullish, and many times I would ask through the year, I keep getting questions of, hey Emma, you keep mentioning gold being bullish, but then you're having difficulties with knowing how to position yourself, right? Yes, you know it's going to be bullish for a long time, but how do you position yourself? And yeah, and I'm saying that in upcoming webinar, we are going to answer all those questions. I have a full presentation on how you can break down these pairs from the lower time frame to look for daily opportunities, and of course using that perspective of a long term, right? When I come to the weekly on gold, of course you can see what happens. These are all weeks, right? This all day from July, higher high, higher low, then of course another higher high, a higher low, then a higher high, right? Of course, higher time frames will be straightforward. The problem Paul will face is knowing how to now tickle this down to lower time frames, right? And this year we are going to be doing exactly that. So you can see that price, of course, on the weekly created a took out the previous higher high, push into the upside, but it's a weekly time frame. I know many of you are not swing traders, so you won't want to pay much attention to that. When it comes to the daily time frame, we can now start seeing a bit more analysis. Price had a previous higher high, took it out as anticipated last week, and it's that push to the upside, right? And as once again, price came into this imbalance, right? Price came into this imbalance. Very nice imbalance here. If we go down to refine this imbalance, you tend to find, I think, a 5-minute demand level. Yeah, this is something to speak about largely in the classes, and then of course into the webinar. We're going to deeply on how you can trade imbalances. For guys who have followed me know that I don't really, I have a special way I trade what called fair value gaps. I don't believe in the ICT way, because I feel there's a more efficient way I discovered of trading fair value gaps and imbalances and inefficiencies. And that's what I tended to use with this particular zone. You'll find a 5-minute demand level in between it. We shall speak deeply about this within the 11 a.m. class and in the webinar coming up next week on Tuesday. So it's that price coming up to create a new higher high. So in terms of long-term perspective, what you want to see is today's candle close above this, of course, candlestick closure. But of course, many of us want to be looking to wait for a full day for that candle to close, right? So what can we see? We can see, of course, there's this gap up. Now, of course, there are very many concepts that will tell you, with a gap up, price must come back and fill the gap up. It's not a must for price to fill the gap up. And as you may witness when you look at your charts, we have gap ups that have been left in the market all the way from November of 2023. There's a 4-hour gap up that price left there, has never filled it. We have seen this happen last year. A few gap ups price has never filled. But of course, that doesn't mean price may not come to fill it, right? So because we have a 4-hour gap up over here, it's also a nice drawn liquidity. Now we are going to use our lower time frames to see if price is to come down into this gap up, right? What will the lower time frame have to achieve? The lower time frame is giving you the story, it's giving you the price action, it's showing what's currently happening, right? It's where generation is being built up, it's where the structures are being built up, right? You get your higher time frame perspective, then you look at these lower time frames to see where price is trying to lead to. So when you drop down to a lower time frame, we want to have a deeper look into what should price do if it's to come down, right? Then the question is, if price doesn't do that, what's it going to do? It's going up, right? It's one or two ways. Okay, three ways, right? But the third way is not, it's not the way you want to go. You don't want to be trading a consolidation. You never want to be doing that. You're definitely going to hit yourself in the foot, right? The market will give you what one of our new MPs here in the new Uganda calls a bloody nose. The market will give you a bloody nose whenever you try to enforce yourself or to coercive, tie yourself on consolidations. So now I come here, today's market open, of course, gave us this high. That's a nice rejection level. As you can see, price came back and rejected it, trying to push the downside. And to the downside, we did see some kind of pullback a little bit, some bit of selling pressure coming into the market. Sellers trying to regain back a bit of what they lost in the morning. And they created this level here. You can see it has one retest. Price came, we have two retests on this as well. We have similar things. So when you look at this area, what do you want to that area? It's a 30-minute time frame. So you don't have to be worried about it. It's a 30-minute time frame, which basically means that we still have room for movement through that day, which means the day will still give you opportunities, right? If you miss that up pre-Asian buy to the upside, of course, to just that gap up and price kept pushing to the upside, there weren't really any serious opportunities. But going into this market, where do you want to be best to look for those opportunities, right? These are the areas. So why I like this gap up, if price comes to this gap up, I'll look for buying opportunities. Why? Because we had multiple rejections coming in from the left-hand side. I can mark it all the way from this level here, over here, right? We have all these multiple rejections around this area. So this becomes a very strong kind of resistance and support, right? So price can come around here and give us some nice buying opportunities. Of course, you want to be very careful with confirmations. Pick up a confirmation of your choice in area of interest. Have at least three. The market will always give you the same confirmation you want. So have at least three confirmation patterns. You're going to look at it, borrowing from structures, from indicators, well and good. But as I'm saying, as a confirmation pattern, very, very important. I'll explain the significance of that. Still come our webinar, where I shall have enough time, because here I don't have enough time to explain all that. Then you can see, of course, very similar structure. These are dollar-related pairs, and you realize that they're all reacting to the tariff news. The difference between gold and the currency pairs is that if the tariffs continue holding, regardless of the situations, regardless of what industries Trump is going to tax in the European nations, we may have more clarity on this by Wednesday during his speech, but regardless of what industries it says tariffs, provided their tariffs, expect gold to be bullish, right? The biggest task will be, how do you position yourself? Where do you look for? And what time frame do you want to pay attention to look for those bullish opportunities at the end of the day? So here we have this strong level here. Price may get to it and break below it. Then we know that if price breaks below it, we shall definitely be looking at the push into these lower levels. That's if price happens to achieve that. The question is, what if price doesn't achieve that, right? So you'd want to look for a break above that and then a push below this, right? Then this being gold, I have volatile pairs. Someone may want to look for, those very short-term moves, the in and out moves. Because it's a 30-minute time frame. A candlestick can easily have 100 pips, right? We can break down a little bit to the 15-minute time frame and see if we have any significant structures. So we did have a significant structure that price had formed right around this, but as you can see, price has already consumed it, which means within these structures here, you don't have any what I would call significant areas, right? Either price will continue respecting this level to push us above this area because price already tapped into it, and we had a breakdown to the downside, price already consumed this supply level, so you have nothing on these lower time frames. You want to stick to your higher time frames. Patience pays, right? These are the markets. The markets are all about patience. So these are best trading opportunities you can get through that day. And don't worry about the time frame being a 30-minute time frame. This is where gold kills a lot of people, right? They become so impatient. Imagine this move happened overnight, right? Imagine what would happen during the day. Ask yourself that. That should always be a call for you to learn to be patient with pairs like gold. High volatile pairs, when you rush into them, they'll cut you. In Uganda, we say them and single. They'll cut you and give you a bloody nose. You don't want to be in that position. So that's as far as gold, what I'm going to be watching out for. So I think I saw a comment on NASDAQ 100. Someone was basically asking if you can trade it on FXPesa. Yes. When you say US30 roll, when you something like US30 roll, this is US30. Then NASDAQ 100 will be UT100 roll, right? It will be UT100. So when you come and see UT100 roll, that's NASDAQ or US Tech, right? NASDAQ or US Tech, it's UT100 roll. So yes, you can be able to trade it with very amazing spreads on equity and FXPesa as well, right? Once again, for the webinars, I'm saying use the link in the description. You'll see the webinar there, or you can just get, in fact, as I mentioned last market snapshot on Monday, we have a link in bio, right? You'll find there something called a link in bio, or a link titled link in bio. Get that link in bio and paste it in your notes or somewhere, right? You can save it on your personal chat, on Telegram or on WhatsApp. You can text yourself, just in case. You can save it there. So whenever we have these webinars coming up, whenever you want to sign up for our classes, or you want to share the links with someone who may be interested, you just share. They will be updated occasionally, weekly, right? They will be updated. You'll find all those links there. So the person who asked about NASDAQ, this is a UT100 roll, and this is how we have it on equity or FXPesa. So we can see, of course, today's markets, as we saw in FinV, sorry, we saw a bit of some tech stocks were up, some were down, and you can clearly see this in the structure. There's a lot of uncertainty because of Trump. You know that Wall Street trades highly macros, right? So whenever they are still assessing the weight of things like tariffs, it's going to be an up and down thing, because some people expect him to tariff, let's say, for example, the agricultural sector, because one of the big things America imports from the European Union and the UK particularly, but also American nations, it does get a bit of agro-processing or agriculture from them. Then some people will look at, let's say, things like in manufacturing, things like cars, of course. And you know that nowadays in the modern century, in 2026, a lot of cars use heavy technology, right? From sensory systems to AIs whatsoever, all that. So you expect NASDAQ to be in a bit of a fuzzy, right? And they're trying to assess. So we had a gap down to the downside. Of course, tariffs don't help stocks. Stocks will plummet whenever tariffs are down. We saw this before. We saw the tariffs. The stocks actually start giving us those big pushes to the upside. We saw them first tank when Trump was introducing his tariffs, right? And as you remember, definitely Wall Street was a bit anti-Trump until later on when things started turning around, and then they began gaining, and they gained so massively, right? We had the biggest stock rise in a single day, of course, thanks to Trump deals. And of course, the stock market gained a lot within a day, the biggest records. Right now, we are looking at this, and I'm not really going to want to put a lot of pressure on pairs like NASDAQ until we have a definite direction. Hopefully, after Wednesday, we shall have a bigger picture, right? So next Monday, we need to come back and now look for those easy opportunities on this pair. So right now, we're seeing some bit of pushback up. Of course, you can expect price to come and fill that gap up, just in case. But what you want to look out for is we have a nice beautiful resistance level here, clearly marked out. We have a nice beautiful resistance level here that is nicely marked out. As you can see, there are two rejections on it. Some people like the double tops. I don't really sustain to that, but when price breaks above this resistance, you can expect a push back down, and then you have a very nice imbalance here, right? Or some people put a gap down as well, right? Same thing, imbalance, gap down, whatever you call it. The market will have to come and fill it in, right? As long as we break above this resistance here. A push below, we are so close to this support level here. So we want to look for the opportunities yet until we have more certainty on what Wall Street is thinking. That's more macro analysis. So we shall have a more clear direction probably by Monday next week, when we have begun assessing from Trump's speeches and his tweets. He would have given us more clarity on what industries he will be looking to tariff, because we're speaking about 8 nations here, right? So that's going to be a variety of industries, and want to see how tech will be affected coming down to this, and how, of course, Wall Street will respond to this. So that's US 100 and of course US 30. It's going to be the same thing. We're seeing it coming around the support level that has held price for quite some time. The support level has held price for quite some time, as you can see. Then it formed a very nice, beautiful resistance. For me personally, of course, I'm a swing trader, so these are things I'm used to doing. Sometimes on some pairs, I'll just wait and have that as a no trading zone. But of course, if you're looking for short-term trading opportunities, you can just look for those key levels that price will have to break out of. And we saw one on NASDAQ, we are seeing one on US 30. And on US 30, we can start prices already attempting a break above that resistance. Of course, to try and go and fill in. Try and go and fill in that. We had this resistance right around here. Of course, we are seeing a minimum of 2 rejections from that resistance level. I'm trying to mark it nice. Okay. We have that resistance being formed, and you have that resistance off of it, or that rejection off of it. Price pushes here. Unlike NASDAQ, we are seeing that this buy is coming from a nice demand level here, which shows you why it's a very strong buy from here. It's really tapped into this demand level, pushing above. So what we need is a candlestick closure above this, a retest of this nice zone, then a push into this area to see if we can fill it up. So that's basically what we want to look out for in terms of US30 and NASDAQ, or US30 roll, and then UT100 roll. Okay, so we have done gold. I've explained the low information. So the link for the webinar once again is there. Charles, shout out to you. Welcome back to a brand new week, brand new opportunities. You can always feel free to go through these pairs. We haven't gone through JPY pairs basically, I think, because we're out of time. But we had a very nice bit of analysis on GP JPY and the USD JPY last week, and we are still bullish. So we had this breakout and retest, price push to the upside. You can start breakout the retest. We had this level here, price push to the upside beautifully. Then it created this nice consolidation here, as you can see. Now, this is what I'm doing, that with this higher time frame, this is a 4-hour time frame, right? I'm always very comfortable waiting for these consolidations to what? To give me a direction, because what happens? Price gives you a breakout, retest, and a very nice impulsive move, right? To go and create a new higher high. After creating a new higher high, what's price going to do? It's always going to come back and create a new higher high, right? It's going to just be doing this on higher time frames. You just have to mark them out and wait for that. Price comes back to a nice demand level over here, and we are seeing a push to the upside. So right now, what we're going to look out for is the obstacle that price is offering us. This was the nice demand level price came into. And right now, what's the only obstacle we are having? It's going to be this supply level or the supply zone. It can as well act as your resistance if you wish, because you can draw it around this. You can see these reactions that price gave you around it. So we want to see a break above this level, retest, continue to the upside. Target, of course, the supply level first before price goes ahead to form a new higher high. These are very basic things that you can always be able to look out for. I think we had some analysis on GP. Okay, this is HFJPY. We didn't have analysis on it last week. When analysis on NZD JPY, yeah, it also played out nicely. We had that break and retest of this level here. Then price came back to this. Our demand level was anticipated and pushed us to the upside. So, with the interest of time, we may not go through this analysis here, but this is how it played out from USD JPY. You can as well go ahead and use for study purposes. We had our first zones always holding price, of course, the break and retests, giving us some nice opportunities. A 4-hour time frame once again. These are very nice opportunities. Then, of course, price coming back into this next level here and then pushing to that upside. So what we would look for more buys above this area here. Then below that area, we have a no-trade zone. So other than that, I would like to thank you guys for tuning in. Don't forget to sign up for the upcoming monthly webinar. The link is in the description. Don't forget to take advantage of the Caribbean bonus. It's a brand new year. It's the first quarter. Learn to just be patient and follow what they call it, and follow your trade plan. Very, very important. Other than that, I'll be speaking more about these things in the next market snapshot, and of course, my 11 a.m. class that shall be having every Thursday 11 a.m. on Zoom. Of course, the link is in the description as well. In the link in bio, you'll find those classes there. And don't forget to prepare for the webinar. Sign up for it right now. Other than that, I wish you guys an amazing day, a peaceful day, and a blessed week. Cheers.